Welcome. This video is for Professor Thomas Hormaza Dow's entrepreneurship classes. We will explore why startups need funding and the stages of funding. A startup is incredibly demanding, especially when it comes to finances. Many entrepreneurs pour their savings into their ventures. However, this is often not enough to get a startup off the ground. That's where startup funding comes in. Think of funding as the fuel that propels a rocket ship. Without fuel, the rocket remains grounded. Similarly, without funding, startups struggle to develop their ideas, build their products, or reach their target markets. Funding provides the resources necessary to transform an idea into a tangible reality. It's the lifeblood that keeps a startup alive, allowing entrepreneurs to focus on what they do best, innovating and disrupting industries. In the following sections, we'll explore stages of startup funding, exploring the unique opportunities available in Quebec's vibrant entrepreneurial ecosystem. Angels on your side. Navigating early-stage support. In the early stages of a startup, securing funding can feel like a daunting task. The pressure to find the right financial backing can be overwhelming, especially when you're juggling multiple responsibilities and trying to bring your vision to life. You have a brilliant idea, but convincing investors to believe in your vision requires more than just passion. It requires tangible proof of concept. This means having a well-thought-out business plan, a prototype, or even early customer feedback to show that your idea has real potential. This is where angel investors step in. They play a crucial role in bridging the gap between your initial idea and the larger-scale funding you might need later on. Angel investors are high net worth individuals who provide capital for startups in exchange for equity or convertible debt. Their investment can be the lifeline that helps your startup survive and thrive in its early days. They are often entrepreneurs themselves, drawn to the excitement of nurturing promising businesses. Their experience in the field means they understand the challenges you face and can offer practical advice and support. Anges Québec is a prominent network of angel investors in Quebec. This organization has a reputation for connecting startups with the right investors who can provide not just money, but also strategic guidance. They connect startups with experienced investors who bring not only financial support, but also valuable mentorship and industry connections. These connections can open doors to new opportunities, partnerships, and markets that you might not have access to otherwise. This guidance is invaluable in the early stages, helping entrepreneurs navigate the challenges of launching a business. From refining your business model to scaling your operations, the right mentor can make all the difference. Angel investors are drawn to innovative ideas with high growth potential. They are always on the lookout for the next big thing, whether it's a groundbreaking technology, a disruptive business model, or a unique product that fills a gap in the market. They understand that early-stage investments carry inherent risks. The possibility of failure is real, but so is the potential for significant rewards. However, the potential rewards, both financial and in terms of contributing to the growth of groundbreaking companies, make it a worthwhile endeavor. For many angel investors, the satisfaction of helping a startup succeed is just as important as the financial return. Planting the seed, pre-seed funding, and its importance. The pre-seed funding stage is all about laying the groundwork for your startup's future success. It's the very first step in the journey of transforming an idea into a viable business. This stage is often characterized by a lot of brainstorming, planning, and initial development. At this stage, your product or service may still be in the ideation phase, or you may have a minimum viable product, MVP, ready for testing. This is the time when you are experimenting with different concepts, trying to find the right market fit, and developing a prototype that can be tested and refined. Pre-seed funding typically comes from sources close to you, friends, family, and your own savings. These are the people who believe in your vision and are willing to support you in the early stages, even when the risks are high and the returns are uncertain. These early believers provide the initial capital injection that allows you to validate your idea, conduct market research, and refine your business plan. This funding is crucial for covering the initial costs of setting up your business, such as developing a prototype, conducting market research, and creating a business plan. In Quebec, aspiring entrepreneurs can benefit from the Programme de soutien à l'entrepreneuriat. This program is designed to support new businesses by providing financial assistance and resources that can help them get off the ground. This program, offered by the Government of Quebec, provides financial assistance and support services to help entrepreneurs launch and grow their businesses. It includes grants, loans, and other forms of financial support, as well as access to mentorship and networking opportunities. Pre-seed funding is not about raising large sums of money. Instead, it's about securing the resources you need to take those crucial first steps and demonstrate the potential of your startup to future investors. This stage is about proving that your idea has merit and that you have the ability to execute it. It's about securing the resources you need to take those crucial first steps and demonstrate the potential of your startup to future investors. This funding helps you build a prototype, conduct market research, and create a business plan that can attract more significant investment in the future. This stage is crucial for building a strong foundation and attracting more significant funding rounds in the future. By securing pre-seed funding, you are laying the groundwork for your startup's success and setting the stage for future growth and development. It's the first step in a long journey, but it's a step that can make all the difference. Cultivating growth, securing seed funding for your startup. With a solid foundation in place, it's time to accelerate your startup's growth trajectory. This is a crucial phase where your initial ideas and hard work start to take shape and gain momentum. The journey from concept to execution is filled with challenges, but also immense opportunities. This is where seed funding comes into play. Seed funding is the lifeblood that can transform your startup from a fledgling idea into a thriving business. It provides the necessary capital to fuel your early-stage operations and set the stage for future growth. Seed funding is typically the first official round of funding that a startup raises from external investors. These investors believe in your vision and are willing to take a risk on your potential. They provide the financial support needed to turn your innovative ideas into reality. At this stage, you have a clear vision for your business, a validated product or service, and a growing customer base. Your startup has demonstrated enough promise to attract the interest of investors who see the potential for significant returns. Seed funding provides the resources needed to scale your operations, expand your team, and refine your product based on market feedback. This funding allows you to hire key talent, invest in marketing, and improve your product to better meet customer needs. Key players in the Quebec seed funding landscape include organizations like BDC Capital. These organizations play a pivotal role in supporting startups by providing not just capital, but also valuable resources and networks. BDC Capital is a venture capital firm that invests in promising Canadian startups across various industries. Their involvement can be a game changer, offering both financial backing and strategic advice to help your startup navigate the complexities of growth. They offer not only funding, but also mentorship and guidance to help startups navigate the challenges of growth. This mentorship can be invaluable, providing insights and advice from experienced professionals who have been through the startup journey themselves. Seed funding marks a significant milestone for any startup. It is a validation of your hard work and the potential of your business. Securing this funding can boost your startup's credibility and open doors to further opportunities. It's a testament to the hard work and dedication of the founding team. The journey to secure seed funding is often long and challenging, but it is also incredibly rewarding. It reflects the team's perseverance, resilience, and unwavering belief in their vision. It also signals to future investors that your startup is on a path to success, paving the way for larger funding rounds in the future. This initial round of funding can set the stage for Series A, B, and beyond, each bringing new opportunities and challenges. With the right support and resources, your startup can continue to grow and thrive, making a lasting impact in your industry. Reaching New Heights Series A funding and scaling up. Congratulations! Your startup has gained traction and your customer base is expanding rapidly. Now it's time to shift gears and focus on scaling your operations to meet the growing demand. This is where Series A funding comes in. Series A funding is typically raised from venture capital firms that specialize in investing in businesses with high growth potential. These firms invest larger sums of money than angel investors or seed funds. They also bring a wealth of experience and connections to the table. In Quebec, Real Ventures is a prominent venture capital firm known for its investments in early-stage technology companies. They have a strong track record of identifying and supporting startups that go on to achieve significant success. Series A funding is a significant milestone. It demonstrates to the market that your startup is ready to compete on a larger scale. This funding round allows you to build a robust infrastructure, attract top talent, and solidify your position in the market. Series B funding scaling further. By now, your startup has successfully navigated the early stages and secured Series A funding. Your business is growing and you've built a solid foundation, but the journey doesn't end here. To continue scaling and dominating your market, you'll need to secure Series B funding. Series B funding is crucial for taking your startup to the next level. It's about scaling further, expanding your market reach, and optimizing your business operations. At this stage, investors are looking for startups with a proven business model, steady revenue streams, and clear growth potential. They want to see that your company can handle rapid expansion and increased market competition. This funding round typically involves larger sums of money than Series A, often from venture capital firms that have a track record of supporting high-growth companies. These firms not only provide capital but also strategic guidance and industry connections. For example, in California, Sequoia Capital is renowned for its investments in tech giants like Google and Apple. With Series B funding, you can invest in advanced technologies, hire more specialized talent, and expand your marketing efforts to capture a larger share of the market. It's also an opportunity to explore new markets and diversify your product offerings, ensuring your startup remains competitive and innovative. Remember, securing Series B funding is a significant milestone that signifies your startup is ready for even greater challenges and opportunities. It's a testament to your progress and the potential for future success. In the next scene, we'll explore Series C funding and how it helps mature startups solidify their market position and prepare for potential exit strategies. Stay tuned. Series C funding. Market domination. Now that your startup has secured Series B funding and achieved significant growth, it's time to aim for market domination with Series C funding. At this stage, your company is well established, with a robust market presence and a strong revenue stream. Series C funding is all about scaling even further, solidifying your market position, and preparing for potential exit strategies such as an acquisition or an initial public offering, IPO. Investors in this round are looking for companies that have demonstrated consistent growth and have the potential to become industry leaders. They want to see a proven track record, a clear path to profitability, and a solid business model that can withstand market fluctuations. Series C funding typically involves large sums of money from venture capital firms, private equity firms, and even hedge funds. These investors bring not only capital but also extensive industry experience, strategic guidance, and valuable connections. For instance, Tiger Global Management is known for its significant investments in high-growth companies like Facebook and LinkedIn, helping them scale to new heights. With Series C funding, you can further expand your operations, enter new markets, and enhance your product offerings. It's an opportunity to invest in cutting-edge technologies, streamline your business processes, and build a stronger brand presence. This funding round is also crucial for preparing your company for an eventual exit strategy, whether that's through an acquisition by a larger company or going public through an IPO. Remember, securing Series C funding is a major milestone that signifies your startup's readiness for market domination. It's a testament to your hard work, dedication, and the immense potential of your business. In the next scene, we'll explore the final stages of funding and how to prepare for a successful exit strategy. Stay tuned. Now that your startup has navigated the various stages of funding and achieved market domination, it's time to focus on the ultimate goal, a successful exit strategy. There are two main exit paths for a startup: an initial public offering, IPO, or an acquisition. An IPO involves offering shares of your company to the public for the first time. This can provide substantial capital, increase your company's visibility, and offer liquidity for early investors and employees. However, going public also means increased scrutiny, regulatory requirements, and the pressure to deliver consistent financial performance. Companies like Uber and Airbnb have successfully navigated the IPO process, leveraging the public markets to fuel further growth and innovation. On the other hand, an acquisition involves selling your company to a larger entity. This can provide an immediate financial return and allow your business to benefit from the resources and expertise of the acquiring company. Acquisitions can also offer a smoother transition for your team and customers. For instance, Instagram's acquisition by Facebook enabled it to scale rapidly and enhance its product offerings while benefiting from Facebook's extensive infrastructure and user base. Choosing the right exit strategy depends on various factors, including your long-term vision, market conditions, and the preferences of your investors. It's essential to have a clear plan and seek guidance from experienced advisors to navigate this critical stage. Remember, a successful exit is not just about financial gain. It's a culmination of your hard work, innovation, and the impact your startup has made in the market. Whether through an IPO or an acquisition, your journey can inspire future entrepreneurs and contribute to the broader startup ecosystem. Thank you for joining us on this journey through the funding stages of a startup. We hope this series has provided valuable insights and guidance for your entrepreneurial path. Stay determined, stay innovative, and here's to your future success. If you found this video helpful, don't forget to like, share, and subscribe for more insightful content. Until next time, keep pushing the boundaries of what's possible.